Hi guys, day 2 review. I'm gonna start with a daily chart to share the narrative behind why I wanted longs today. And then we look at the overnight session profile on NASDAQ. So I want you to keep this level in mind. That was our higher time frame liquidity draw. Right there. That was hit yesterday. Where is it? There, that was it yesterday. So now, from a daily standpoint, if you recall the DOL lecture, if you have an objective and it fails to close above, the next drawn liquidity is, drum roll, dum, 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 a daily low. Now, separate and aside from that, USD 100 or US 100 NASDAQ should be bearish since May. That's the 40-year seasonals that we've been playing with, and it was not. So we don't know what's going on, but we know a couple things. A lot of short sellers are trapped. A lot of persons, I'm pretty sure I wasn't the only person who wanted short in May. A lot of persons probably went short. They got squeezed out, same way I did. The more deeper pockets are probably still holding drawdowns, hedging, or building in for longer term down movement. That's what I think. But with that in mind, let's take a look at the technical structure. What is supporting that a drop may be coming on NASDAQ? Drawn liquidity. Whenever we push towards a drawn liquidity and fail, that is here, failure swing. By definition, that's a failure swing. There. Yeah, I'll leave it alone. That high, right? That's a failure swing. So if this is a failure swing, liquidity always resides above a failure swing if it's towards a high and the drawn liquidity is not met. That was done. Now, once this is done and we fail to close, the next thing we're thinking is forget the time frame and look at the structure. We had a run on buy side, higher lows from sell side. The drawn liquidity is lower. So we're coming into today with a bearish undertone, not a bearish bias, bearish undertone. The market is setting up for a bearish move. So you're now looking for what are the things or the signatures that should be present in a bearish market? Well, obviously, we're going to have the drawn liquidity. Best case scenario. Then we have low hanging objectives for the drawn liquidity. This daily low. Why this one? Why that one? Because this is the day right here that took liquidity. So if you think along the lines of purge and revert, if this is the day that took liquidity and we break it slow, when you retrace, you're looking for shorts. I don't want the shorts to be today. I didn't want the shorts to be today based on where we open, but you'll see that on a lower time frame. The main takeaway is upside drawn liquidity was met. Previous daily high is taken. We have two higher lows here, housing liquidity. So for me, my drawn liquidity is this guy. That daily low is my drawn liquidity. Okay. This is low hanging objectives. Why this? Because after buy side is run here, this low being taken makes this price swing from here to here. There. I think this should be accurate. No. If not, I'll refine when I go to a lower time frame. That right there should be your dealing range. If that's your dealing range, 50% of your dealing range is right here. So after this low gets swept, anticipate a run back to this line to set up further shorts. So let's put that right there. Right? When you go to a lower time frame, it'll make more sense. So for now, the only things or the only elements of a higher time frame we need is the run on buy side, where the sell side run should be, the drawn liquidity lower, and equilibrium. Let's drop to our hourly chart. No need to look at a million charts. Now, here's Friday's high. There. Here's our drawn liquidity. Our dealing range is that high down to this low. The low that was formed at 8 o'clock here, creating overnight session low. So the moment we saw this previous daily low being swept, right? The moment we saw a previous daily low being swept, that becomes your dealing range. Your immediate drawn liquidity becomes 50% of your dealing range right there, which means on a lower time frame or lower than this, 5 minute, the only thing that you should be thinking is if this guy is bearish and we just took sell side, allow for some kind of retracements back into premium to set up the next round of selling. All right. So M5. Let's see what that looks like. Now, I don't think it needs any more refinement, but we're here already. So there. That's the level. That's your 50%. Now, at this point in time, equities market is open just around here. This is 9:30 New York time. This is 8:30 Chicago time, UTC -5. And that's what I use. I want you to take a look at this for a moment. The downside objective was met, pierced at 8:35. The 50% that we're now looking for a price to trade up to is sitting just above overnight session. So from a trade idea standpoint, what you want to see is a run from some change in the state of delivery down here towards that level. If it goes higher, beautiful, life is good, no big deal. What's important is this is the idea you want, and you're now looking for confirmations. You can be absolutely mechanical, find your M5 down candles, CSDs, wait for the order blocks to be validated and play them. Perfectly fine. But in this condition, because this is the candle that closed below overnight session, and this is the big down candle that we are currently in, and it's a big down candle, the chances of M1 setting up a move before this big M5 candle gets validated is very high. It's very high. Sometimes, you get a really big move that runs these and then it comes back, but we've just taken the liquidity. There should be a reaction from that level. The reaction is what you want to trade, all right? So 2 things to focus on right here. Number 1, this big down candle needs to be traded through, especially its high. For the best setups, its high needs to be traded through, all right? For low-hanging objectives, if we close through this here, big green candle closing through, and above 50%, you could stock retracement on M5 and be good. But because I saw that this is likely to set up on an M1, I dropped the M1 right here, and I'll show you the trade that we took. So 8:35 starts right here. That's going to be important. This line here is 8:35. If 8:35 is the candle that sets up the run higher, it means this drop is taking the 8:30 candles low right there. Once that is taken, you're now focused on that down candle's high. Like that. Here. I know it's probably annoys you when I don't use the shift, but hey, I don't know. This right here, after this gets traded through, I went long here for this. Put on everybody's favorite indicator. Let's put my stop there. My stop was actually just about here, but I'll put it there. And my target was overnight session high. Best case scenario is always going to be that, but you don't need that to make money. This is what you need. Held through this, we retraced, then this push. partials, break even because we're not crazy, and allow for the rest to run. And I think I took partials here again because a new high has been made. And I think I closed somewhere in here. Maybe, I don't remember. Somewhere in here I closed, and then we ended the call, and that was it. But you could always take a look at the delivery and see what it looks like. So what's the main takeaway here? The order flow is expected to be bullish here. Everybody is expecting a ginormous sell-off on NASDAQ, the mother of all crashes. But there is no clear evidence that it started as yet. So right now we're just playing the technical rules, watching for dealing ranges, premium arrays, all that good stuff to set up. There you have it. So that's a trade idea. And yeah, this profile should look very familiar. I think we discussed it briefly yesterday. Overnight session, low swept, entry forms here, runs, overnight session high. There you go. So not sure what you were looking at today, but that's the trade we took. There is another trade idea that some of the guys saw, which is very good, but I wasn't interested in it, but still very good for them to see it. Zoom model inside here. When these highs are being swept, this candle closed. Most persons went short here. Got a beautiful push. I didn't take that. I took this and another entry in here, but no big deal. But yeah, hopefully that helps. And what I want you to pay attention to most is CSD is happening all over the chart. Any down candle is high that could be taken, could have been a CSD. Anyone. But order of delivery always suggests that before a CSD, we should have a liquidity run. So if you've been trading the OB model, that's why we wait for a run on liquidity before the CSD, and then your entry forms. Everything else, a little bit too much guessing. But yeah, hopefully that helps. Is there anything else? I didn't look at AU today, but I guess I'll just wrap up AU as well for anybody trading it. Overnight session, efficiently traded. We traded down. If I was looking at this pair, in hindsight, is it really a hindsight though? If this is the rules that we know. Down candle high taken, retracement. We'll be looking at a long, something like that, targeting this. I have no idea what this level is for, or I don't remember, but yeah. So 508, it's about 15 points. Or if you held it for a push through, or if you added anything else to it, like for example, let's give you a little bit of this, something like that, then you could target that half deviation projection right there, and beautiful, half a day. So there you go, good trade idea, 3 to 1 R, all the things you want. And yeah, hopefully that helps. See you tomorrow on our next call. Do enjoy the rest of your day, guys. Bye-bye.